Hi, welcome to Market Alert for Wednesday, the 8th of March 2017. So yesterday, market very quiet, as I warned in yesterday's Market Alert. Tuesday, and also the market waiting to see what Yellen is going to do with the interest rates a week today. So the market opened, we had a sell signal, it moved down, we hit a major support here, and this is running in real time at the moment, as you'll see. And at this point, we know we haven't got enough momentum because of the backdrop of it being Tuesday and the market waiting. So you don't have to sit and watch this one completely lose 30 points. You can actually reduce the risk. I was going to move things on a bit. You can see the market's coming back. And at this point here, you can move the stop to break even. You're better off having no loss than waiting to see if the market's going to actually go down and actually break. We had a run through here, the market came back, there's no volume, it's dropping off, and then we see what you saw yesterday, the market coming back through, comes back through the 20 bar averages and stays there for a bit, but then straight through, because that's what they want. They want the market up, as I keep telling you. They don't want it selling off just yet. And then we had a buy signal, but no news again. So the market turns around and comes back once again and stops out this trade as well. And then for the rest of the session, you can see how the market put in signals that were just not filled because of the lack of momentum, market being quiet, until we got towards the end of the session when you see the market do this, but it's too late by this point. So again, I did warn yesterday that Tuesday and Yellen looming in the background is going to give this market some grief. In the daily, we've got a situation where we've got lower highs now. The market's actually taken, and at the moment it's currently trading below, not closed. It's trading below the 20,902, which is the first time in the whole of this up move. The market is now starting to struggle. And again, we'll redraw the 76% if this moves up to the upside, or if it moves to the downside, we'll redraw it in to get a measurement of the momentum. Notice also the volumes increased significantly in the last 2 days as well. There is some selling around here. It looks like the market's anticipating a Yellen increase, and then the carnage is going to begin as we head into the second 2 weeks of March. This is not sustainable. We know it's not sustainable. It's just being held there for the time being. And as I keep saying, you've got to understand how much hatred there is for Trump by the not only the Democrats but also the Republicans as well. Probably the most hated man around in US presidents since the US came into being. It really is absolutely hatred to the core of Trump, and they're going to make sure that he suffers for it as a result. And again, I'll put a link into the email, a chap called Tucker Carlson, who did a speech about it the other night. It's about 30 minutes long, but you get a flavour from the first 5 minutes of how much of Trump is hated, and something that I've been saying for a very long time in this Market Alert as well. So they're going to do anything they can to derail what he wants to do. And again, you also keep in mind we've got this debt ceiling that will be hit a week today as well. And what have we got? Daily chart, yeah, we've done that. Let's have a look. No news today apart from crude oil inventories. These are out at 3:30 p.m. This is a farce as well now, as the market doesn't really react to it as it did do. No reason for the market to be up as high as it is for crude oil as well, because there simply isn't the demand as is portrayed at all. And finally, on the implied volatility, we've got 9.40 down from 961 yesterday because the market was quiet. This is shown here as well. And just to finish off, this weekend we will be seeing the US go put their clocks forward for the summer times. So it means for the next 2 weeks the US markets will be opening at 1:30 p.m. and closing at 8 p.m. So that's going to be for the next 2 weeks, which means that Yellen's announcement next week will be at 6 p.m. and not 7 p.m. as well. And this is going to be the same for all of the markets that are traded as well. You should have received some sort of notification about this from ETX. And in Sunday's market alert, I'll show you how to change the times in the software to account for this 2 week change in times. And that's it for today. Again, I would expect a bit more quiet range, and unless something else comes out that drives the market lower. But there's certainly some weakness coming into the market at the moment. The euphoria of the big rally that we've seen in the last few weeks is certainly over. As far as I can see, it would be nice to get a bit of a rally back to the upside to that 76% retracement and actually fail. As I've shown before, what we're looking for is some sort of bounce back to 76%, and then we'll have the rising lows and then see the market moving back down with a major correction. That's if they will allow it, but that's how it should work. It's how it's worked in the past. But who knows these days with the amount of manipulation there is around. Right, that's it. I will see you in tomorrow's Market Alert reporting later on today. Other than that, thanks for watching. See you in the next one.